Cynthia DeFazio. I'm joined today by Stewart Willis. He is founder and president of Asset Preservation, Wealth and Tax. Stewart, how are you today?
I'm doing unbelievable. I was surprised you got the wealth and tax right. I know, people are saying, well, what is wealth and tax? We thought, it was tax and retirement services. We've been in business a long time, and our messaging is really important to us. And as you notice, for those of you who have been watching for the last few years here, we've rebranded. We changed the name of the company from Asset Preservation Tax and Retirement Services to Asset Preservation Wealth and Tax, and we think it speaks a lot about what we do at the company itself. I think sometimes we had so many words inside a title that I was trying to fit every possibility in there, with retirement services. Yeah. But no, we're excited for the new era. Same company, new brand.
I love it, and it's so streamlined and so simplistic. Wealth and tax, it says it all. Truly.
Just like me, right?
Just
simplistic.
Like you. Well, Stewart, I have to ask you right out of the gate, obviously going home every night after work, I'm turning the TV on and I'm seeing more and more bad news. So overall, let me ask you, what is happening in the markets right now?
Well, clearly we're in bear territory. I mean, we've seen a substantial enough correction that we're technically in bear territory. I think we have a couple issues. We've seen essentially what I would consider a crash of the markets. We still think there's more blood in the streets, more potential downside coming because policy issues and so forth. There's just nothing really kind of resolving the underlying issues. And of course, I think what's on everybody's mind is inflation.
Absolutely.
There's a good and a bad. Let me try to be positive here about one thing. The nice thing is we're hearing Social Security will be between 8.6 and 8.9% of a cost of living adjustment for next year, for 2023. So that's a benefit.
Right.
But that should also scare you, right? If you're hearing an 8.6 or 8.9%, COLA, cost of living adjustment, that means stuff's getting more expensive. And obviously the Federal Reserve is trying to slow down all of this inflation with hiking all of these interest rate hikes. Obviously, we saw 50 basis points or a 0.5% increase in the rate. Now we're seeing 75 basis points, and I only believe there's more to come. But I think the problem, Cynthia, is that they're using the wrong tools. They're using a sledgehammer when they should be using a screwdriver to fix this. And there's some very simple answers. And quite honestly, I hate to be political. I've tried to stay away from it as much as possible here. But, the administration is just lost right now. They're trying to stick to their policy of, green energy. And, it's costing people a lot of money. Yeah. And, they're willing to crash the stock market in order to lower that statistic. And I think it's a big, big mistake. What people don't realize, Cynthia, is that the stock market isn't just people that are wealthy per se, right? It's you, the audience, that have their 401ks, their pensions, their retirement plans that are all depending on the performance of this market. And when the federal government and the Federal Reserve, and just remember, if nobody thinks the Federal Reserve chairman is a political entity or subject to political pressures, just look, even Donald Trump did it. Donald Trump hammered their Federal Reserve as well, right? I hammer both sides pretty equally. I try to. But, this Federal Reserve chairman is just lost. He's, giving in and they're willing to compromise people's life savings to push down this inflation number. All they have to do is fix the supply chain and produce domestic oil, right? I am... in college, just by nature, I went to the most liberal university in the world. I went to Berkeley, right? And people will say, Stewart, well, why do you think the way you do coming out of Berkeley? How is that possible? I'm a moderate. I'm not a far right guy or a far left guy. I try to keep it real. And I think that right now, as a country, we need to keep it real and really know where we're at.
Most definitely, because obviously, as we know, Stewart, it's very scary out there right now for people across the board of all ages, if you will. So let me ask you, what types of questions are you hearing from clients, and what are they concerned about right now?
Yeah, I mean, well, number one, obviously they're concerned about, whether or not they can retire, or those that have retired, whether or not they can continue being retired, because we have seen a decline. And when I tell my clients, all the time. And I jokingly say I'm a man of leisure. Look, for a decade, we've had this amazing run where we don't have to take tons of calls, of people freaking out, because we've had a market where a blind chicken could have made money over the last decade, right? And a lot of these self-investors have been able to do it on their own.
Yeah.
Well, what I tell people, what I tell my clients is, don't watch the news to get your market advice. Look at your statement. What's happening? Because sometimes they're not the same. The other day, the market was down 4%, the S&P 500. My clients were up 0.12%, right? And that's not all the time with all portfolios, but just pay attention to what you have and not just the market, because just remember, these television shows that are 24-hour television shows that are talking about the market are trying to get you scared, because the more fearful you are, the more you watch, right? And that just boosts up ratings for these specific shows. So I think I jokingly say I'm that man of leisure, and yes, I've been taking tremendous amount of phone calls because people are worried right now. And I hope today what we focus on today's show will be, what can we do to in these situations to fix where we are.
Well, that's my next question, Stewart. What should investors be doing right now?
Well, just remember, there's two emotions that guide people when they invest. It's very simple. It's fear and it's greed. And Warren Buffett, has this really neat quote. And what he said was, investors need to be fearful when others are greedy, and greedy when others are fearful. And just remember, there's opportunity here. There's an opportunity to really take advantage of where we are in this market. Yes, the market's down. Yes, we've seen a correction. Yes, we're in bear territory. Yes, we're heading into recession. And I know people don't like to say that, right? But those things are all true. I would just say this. What people need to do is they need to assess their risk tolerance. They need to make sure, listen, everybody is aggressive when the market's going up in their mind. They can, I can tolerate 30%, 40% down. Well, guess what? All those people that filled out our questionnaires, our risk tolerance questionnaires, that said, I can handle 30% down, 40% down. Well, if it's 10% down and they're freaking out, they may be in the wrong portfolio. Yeah. Right? So that's why it's really, really important to communicate. And if you haven't communicated with your financial advisor, it's a tremendous issue right now. So communication is everything. I think it's super important. I've been on the phone literally the last few weeks here, I'm used to maybe 4, 5, 6 calls a day from clients. I'm in that 50 range right now. It's just, I'm certainly not that man of leisure I wish to be. Right. Yeah.
Stewart, how important is it to have a fiduciary analyze your portfolio, first and foremost?
Yeah, I think it's super important. When I say, analyze your risk, well, number one, if you haven't had your portfolio analyzed for risk, I think it's super important to do that. Number one, make sure whoever you deal with is a fiduciary. And it's time to really take advantage. But let me just tell you this. When I said earlier that there's opportunities in the market, there's things that people can do to really take advantage of where we are today.
Okay. Well, Stewart, I have to ask you, people that have lost money, what should they be doing right now?
Well, number one, I just say don't play scared. And what I mean by that, like when I go to Vegas, for example, I'll tell you a funny story. So I was actually playing poker with another big financial advisor here in town, and he had a couple of his advisors there. And I was so entertained by the fact that one of his advisors, who fancies himself a big advisor in town here, obviously didn't have much money, because anytime he lost, he freaked out. He's yelling at his wife. It was hilarious. I'm so damn entertained by this guy, because he was playing a game that he shouldn't be playing, right? A few of us that were, listen, we're talking about small stakes, a couple $100 here, and this guy is like not able to, he's not concentrated, he's losing his mind. And here's the thing. You can't play scared, because you'll be like that guy who just makes dumb calls, right? Don't overreact. But also remember, those two emotions that guide you when you invest, there's only two, fear and greed. And you need to make sure you have those under control. Know where you stand. It's super important, to make sure that you understand, where your emotions are when it comes to investing.
Absolutely. Well, Stewart, I know you have a very special offer to present to the viewers at home today. Let's talk about what that is before we open the phone lines.
Yeah, absolutely. Well, what we're going to do today is we're offering a complimentary portfolio review. And in that complimentary portfolio review, what we're going to do is we're going to take a look at what kind of fees are you paying? What kind of risks are you taking? Are you taking way too much risk in this environment that we're in this corrected market? Have your risk tolerances changed, since the last time you talked to your advisor? We're going to do that at no cost. More importantly, what we're going to do when we come back from break, what we're going to talk about is we're going to show you how to take advantage. We've talked about Roth the whole time, Cynthia.
Absolutely.
What we're going to do is I'm going to show you when we come back to break how to take advantage of this down market, where we're at now. But first and most importantly, you need to reach out, find out if you need help. Give us a call at 833-652-7829 or pick up your phone. We have that QR code right on the screen there. And what that'll do is take you right to our website where you can sign up for your complimentary portfolio review. But you have to take action. If you have concerns now, if you're worried, all you have to do is reach out. We'd be glad to give you a second opinion.
Stewart, thank you so very much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We know you have a lot of questions for Stewart, especially right now in such a volatile market. When we come back, we are going to dive in further to the Roth conversion. You've heard Stewart talk about this in the past. Let's see if it's going to be a benefit for your situation. Stay tuned after this very short commercial break.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Wealth and Tax Services. Stewart, it's great to have you on the show today and talking about such an important time, the volatile market, and what your investors should be doing right now, if you will. We've talked quite a bit in the past about using a Roth conversion. Can we talk about what that is exactly and how we know it's a benefit for one of your clients?
Yeah, and it's not the right thing for all, but it's right for a lot of people. Now, first, to understand what a Roth conversion is, why it's relevant, you really have to understand the differences between a Roth and a traditional IRA, for example. So when it comes to a thrift savings plan, a 401k, a IRA, they're all pre-tax. The benefit of that is that you were told that by your employer, by your financial advisor, put away all this money tax deferred, and guess what? When you're retired, your income tax rate will be lower. Now, most people don't believe that tax rates are going down in the future. Just remember that. But let me say this, that it's really important to understand that when you're putting away that money tax deferred, one day you're going to have to pull that money out, and it's going to be taxable. So you have to think about the implications of that. So what a lot of people do is they put away all this money tax deferred because they want that immediate tax deduction, right? So like if you go and file your taxes and your accountant will say, hey, you know what, why don't you go ahead and put $5,000 away? It'll save you $1,000. Wouldn't that be nice? And you say, oh yeah, great. So I want to save $1,000. But what you're not realizing is you're now going to start having to take that money out when you're retired. It becomes taxable income. It affects a whole nother range of things, including Social Security that was never meant to be taxable. But what the Roth is, you don't get a tax deduction when you contribute, but the benefit is that all the years of growth that you have in that account are all tax-free. So when you let's say you put $1,000 in, and over the next 10 years it grows to $10,000, not only is the principal tax-free, all the interest that has grown is tax-free as well. the beauty of that is that it doesn't affect Social Security taxation right now. And we're hearing tons of things. Just the other day, Bernie Sanders and Lindsey Graham were taking part in a Senate, committee hearing to save Social Security, because obviously people are living longer. Social Security, it's a big deal.
Right.
Before, there were 42 workers for every one retired person. Right now, it's 3 to 1.
Wow.
There's only 3 workers for every one person retired.
Wow.
By 2050, that number is going down to 2 to 1. So obviously, there's some things we need to do. The first thing they're going to do is they're going to attack the taxability of Social Security. And what they're going to look at is your income. It's all income tests. They never do asset tests. They look at income tests. With a Roth, at this point, it's completely invisible to any of those tests. So right now, when we're in the most efficient tax window in history, I think it makes sense to consider whether or not it makes sense. Now,
Sure.
What a Roth conversion is simply converting an existing IRA to a Roth. So what that means, Cynthia, is that you're going to have to pay taxes.
Right.
But you're going to be able to do it at your leisure. You're going to be able to make an informed decision to say, look, I want to pay my taxes now at this lower tax environment. Don't forget, at the end of 2025, the Trump tax cuts go away, and everyone's paying more taxes in those middle brackets. It's not just a benefit for the wealthy. It's
Right.
benefit for most people. So super, super important to make sure you take advantage of that here. And what the conversion does is you pay taxes now, all the future growth is tax-free, so that when you go into retirement, you're not going to have to make all of those other things more taxable.
Stewart, if the Roth is that much better, why aren't more advisors pushing clients in that direction?
I think number one, in terms of advisors, I think it's a weird pressure. A lot of advisors like you inside an IRA because guess what? You never end up using the money. When you're in a IRA, you just leave it there. You're so scared to pay the tax bill that you never actually get to enjoy your life's work.
Right.
Right. In a Roth, people will tend to enjoy it more, to be able to enjoy it and not be afraid of that tax bill.
Yeah.
And once again, when it comes to to not just advisors, but also, tax preparation people, CPAs, and so forth, they never want to see you jump a bracket. They always want to be a hero during this year. And sometimes it makes sense to do that Roth conversion, to pay a little more tax now, because there's a tremendous benefit.
Yeah.
And I'll tell you this, Cynthia, what we're doing right now is we're getting reached out by tons of people. A lot of people want to know, hey, is this right for me? Is it not? And the funniest thing to me is that I'll have people that'll say, hey, I've been watching your show for the last year or two. I'm not the kind of guy that makes a call to, a TV show. This makes me uncomfortable. Here's what I'm saying. We are the same people in person that we are on TV. If you don't like me here, you're not going to like me in person, so don't bother calling. But let me tell you this, what we're going to do to incentivize our potential clients out there that need help is what we're going to do is we're going to offer a complimentary, no obligation, $50 gas card.
Ooh.
And what we're offering that for is something we're calling the Roth Conversion Challenge. Okay, now here are the details. What we're saying is we're challenging you to see if a Roth conversion makes sense for you. Now, we can only do it for the next 15 callers because our schedule's going to book up. But for the next 15 callers, what we're offering is a complimentary $50 gas card to help you fill up your tank, because we know what it costs to fill up right now, right?
That is true.
And if you do that, here are the details. If you have an IRA or 401k or thrift savings plan or any sort of retirement account that's pre-tax that has over $250,000 in assets, if you bring that in, bring your statement in, and we do a complimentary portfolio review for you, we're going to go ahead and give you that gas card to help incentivize you to get this done. Now, there's no obligation. It's not saying that you want to become one of our clients or anything like that. It's just saying, hey, get off the couch, pick up your phone, click on the QR code, sign up for that, whether you're the first 10 callers or the first to click on that QR code and sign up. we will honor that for you. But you have to take action today. Give us a call at 833-652-7829, and we will let you know, either myself or one of our advisors, whether the Roth conversion makes sense for you.
Stewart, thank you so much. What a fantastic idea. I love the gift card. I'm going to call in right now. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. As Stewart mentioned, we are going to take a very short commercial break, but when we come back, we're going to talk about the difference between tax preparation and tax planning. Stay tuned.
Your investment should reflect your concerns with the market. As prices continue to increase for everyday items, you may be wondering if your investments can keep up with inflation. Will your investment remain strong even if the American dollar weakens? Introducing the Foundation's inflation-sensitive portfolio, built on established corporate stocks, while including alternative investment focuses such as real estate, alternative currency, and precious metals to provide diversification. This portfolio seeks to provide you with a strategy that rises to the challenges seen across the market today. Invest in a portfolio designed as an answer to the growing concern of inflation. Discover more today.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Wealth and Tax. Stewart, a great show we're having today, talking about such important topics, talking about the market correction, if you will, and what we're going through right now. We talked a little bit about Roth conversion, and in this segment I want to ask you the difference between tax planning and tax preparation. Is there anything that people can be doing right now in regards to tax planning?
Yeah, I think the one thing to understand is the difference. So tax preparation is what you do when you go into your tax office, every February through April 15th, or if you extend beyond that. That's just preparation. That's just filing your taxes. Not a lot of planning can be done before April 15th, and other than maybe contributions. And the reason I say that, I think it's a terrible time to do tax planning for a couple reasons. Number one, you don't know how the year's going to unfold. Last year's already over, not a big impact you can have. But more importantly, I've talked about this before, is that a lot of tax advisors, tax prep people, CPAs, etc., they are exhausted during tax season. They're working 10, 15-hour days, months on end.
Sure.
By the end of it, they're just absolutely exhausted. You don't want to be doing real tax planning during tax season because they're always in a rush. No matter how good your CPA is, even if they're well-intentioned, you want to make sure they're fresh, they're able, they're not working on a 15-hour day. I think that's number one.
Okay.
But more importantly, when it comes to tax planning, what tax planning is, it's all about looking at, hey, are there any losses? Like obviously the market's down now. There's some losses out there that you can harvest to your benefit potentially. Does it make sense to do a Roth conversion in your situation? And I'll tell you what, you asked, is there anything we can do right now?
Yeah.
Now, right now, the market is obviously down from its peak, no question. But what can we do? Well, it's like Warren Buffett said, right? When other people are greedy, be fearful. When other people are fearful, be greedy. Well, right now, when people are scared and the market's down, what the Roth does, back to the Roth conversion, is that it allows you to be able to grow everything tax-free, right? So once it's a Roth, all the future growth is tax-free. So if your portfolio is down 10, 20, 30% right now, do you remember the rebound we saw in COVID when we saw 32% down? Well, of course, people were scared. It was a crazy time.
Absolutely.
But what did we see? We saw a 100% rebound, a doubling of the stock market over the next year and a half.
Yeah.
Now, the clients we had realized that we don't usually do tax planning until the end of the year. So we can look back and say, okay, well, what's happened in the year? Did they get any bonuses? Did they sell any houses? And we don't want to do Roth conversions until we typically know what's already happened in the year. So we don't put them, pin them into a corner. There's one exception to that rule. That one exception is if we see a market correction. Now, we've only seen one substantial correction here, besides the one we're currently in for the last decade, right? Obviously, March of 2020. Now is another time. The market is substantially down. And remember, if we convert to Roth now, we're converting to Roth presumably at a lower value in your IRA accounts or your 401ks or thrift savings plans, right? all of the rebound, the bounce back can be tax-free if we do it inside a Roth. Now, it's not right for everybody. And that's precisely why right now we're offering that Roth conversion challenge to our clients. So once again, what we're saying is that for the next 15 callers or people that click on our QR code and go to sign up for a complimentary portfolio review, what we're going to do is we're challenging you to see if the Roth conversion makes sense. There may not be a better time than right now. The market is suppressed. That bounce back, is there going to be more blood in the streets? Is it going to continue to go down? Cynthia, I don't know, right? Like if I said I knew where the market was going, I'd be on my 500-foot yacht in the south of France somewhere.
You'd be a man of leisure.
Right, I would be a man of leisure. But I can't be right now. There's too much work to be done. And even once people get over the fear, what they now have to look to is opportunity.
Yeah.
And right now, what happens is there's a perfect, beautiful place for opportunity. And that opportunity says this. If we, for example, just think about this. If you have a $100,000 account that is now, $60,000 or $70,000, right? That bounce back, if we convert that now, pay the taxes on that now, it may or may not make sense. Everybody's situation is different, but that bounce back is all tax-free. We have a massive discount right now. Not only are we in the most efficient tax window in history, we're getting a tax discount, right? And that ends in a few years.
Absolutely.
We're also getting a market discount, so we can convert at a discount as well. But here's what I'm doing. So for the next 15 callers, if you sign up for our complimentary portfolio review, you bring in statements that are IRAs, 401ks, thrift savings plans that have over $250,000 or more in investable assets. You bring it in, no obligation at all. We will give you a $50 gas card to help combat the effects of inflation, right? But you have to take action. Give us a call at 833-652-7829. Click on that QR code. We'll tell you, you'll meet with one of our great advisors to tell you whether or not the Roth conversion makes sense for you and your family.
Stewart, thank you so much for another amazing episode this week. I know the viewers at home have truly enjoyed it. I know I've learned a lot as well, so thank you so much. To the viewers at home most specifically, we would like to thank you for spending time with us today. That number to call is 833-652-7829. Stewart knows you have a lot of questions about where you stand in the market today. He is offering you the opportunity to talk with him directly. Again, that number is 833-652-7829. Be safe, be happy, be blessed, and thank you for watching the Asset Preservation Hour. We'll see you back 1 week from today.